Let's delve into the defining narratives for Bitcoin and crypto in 2026, drawn from the latest institutional research and expert predictions. The Great Divide, bull versus bear outlooks for 2026. The market is split between two powerful narratives. The bullish thesis, the institutional era dawns. A strong consensus from major asset managers like Grayscale and Bitwise suggest we are entering the institutional era. This shift is expected to end the four-year cycle. The old pattern of boom and bust tied to Bitcoin's halving events may be broken. Instead, we could see a steadier, more mature market driven by long-term capital flows. Drive prices to new highs. Based on constrained supply and steady institutional demand, many forecasts cluster in the $120,000 to $170,000 range. Some, like venture capitalist Tim Draper, remain even more optimistic with a target above $250,000. Trigger an ETF-ification of crypto. Following the success of spot Bitcoin ETFs, analysts project a wave of new products. Bitwise predicts over 100 new crypto-linked ETFs could launch in the US, covering everything from Ethereum and Solana to more niche assets. The bearish warning, a potential market reset. Not all voices are optimistic. Key risks and counterarguments include a dramatic correction. Bloomberg Intelligence's Mike McClone warns of a potential market-wide drawdown, suggesting Bitcoin could fall to as low as $10,000 due to intense competition from thousands of other digital assets. Technical vulnerability. Some technical analysts note that Bitcoin's recent price action could indicate the start of a longer correction phase, potentially extending into mid-2026. Macro dependence. The market's health is tied to broader economic conditions. A return of high interest rates or negative macroeconomic news could trigger rapid outflows from crypto ETFs. Of course, here is a brief explanation of the foundation, regulatory clarity, and market structure. Think of this as the rules of the game being written for Bitcoin and crypto. The core idea is that for Bitcoin to go truly mainstream and be trusted by big banks and millions of people, it needs clear laws and reliable financial plumbing. Here's what that means. 1. Clear laws, regulatory clarity. Right now, the rules are fuzzy. Are cryptos commodities or securities? Which government agency is in charge? This confusion scares away big investors and companies. The goal for 2026, key legislation like the Clarity Act in the US is predicted to pass. This would finally answer those basic questions, dividing oversight between agencies like the SEC and CFTC. Clear rules mean traditional finance can participate without fear of legal trouble. Number 2, reliable financial plumbing, market structure. This is about building the bridges between the traditional financial world and crypto. Institutional tools. Big players need services they already understand. Expect more banks to offer crypto custody, secure storage, and to start accepting Bitcoin as collateral for loans. Stablecoin framework. Laws like the Genius Act are expected to create a safe federal framework for stablecoins, crypto pegged to the dollar. This makes them trusted tools for fast global payments, essentially becoming the digital cash of the internet. In short, regulatory clarity and market structure is about moving crypto from a Wild West to a regulated market with clear rules and professional infrastructure. This is considered the essential foundation for the next wave of mass adoption and the institutional era predicted for 2026. Beyond price, 2026 is expected to be a landmark year for crypto's legal and financial infrastructure. The Clarity Act, a pivotal piece of U.S. legislation expected to be voted on in early 2026, aims to define clear rules for digital asset markets and divide oversight between the SEC and CFTC. This is seen as a critical step for deeper Wall Street engagement. Stablecoins go mainstream. With the Genius Act providing a federal framework, stablecoins are poised to become the Internet's dollar. Their use for fast, cheap global payments and settlements is expected to explode, with circulation potentially tripling. Institutional on-ramps multiply. Traditional finance is diving in. Large banks like JP Morgan are preparing to accept Bitcoin as collateral, and more firms are expected to offer crypto custody, lending, and trading services. Strategic moves to watch. The interplay of several key factors will shape the market's trajectory. Supply and demand mechanics. Shrinking liquid supply. Post-halving dynamics and massive coin accumulation by ETFs and long-term holders are locking up supply. Crypto quant data shows exchange reserves at multi-year lows. The institutional bid. Demand is evolving. It's no longer just speculative trading. Institutions are making strategic allocations. As one CEO noted, a growing share of Bitcoin supply is simply stops moving. Catalysts and risks. Positive catalysts. Passage of the Clarity Act. Continued net inflows into spot crypto ETFs. Expansion of crypto services by major banks and financial platforms. Key risks. A return of sustained ETF outflows, major security failures or hacks, or a sharp downturn in the broader economy and stock market. Navigating 2026, a practical perspective. Given the high uncertainty and volatility, experts often suggest specific strategies over trying to time the market. The DCA approach, dollar cost averaging, investing a fixed amount at regular intervals, is frequently cited as a prudent way to navigate Bitcoin's volatility, allowing you to buy the dip automatically if prices fall. Focus on fundamentals. Look beyond the price chart. Monitor on-chain data like exchange reserves, track ETF flow data weekly, and follow regulatory developments in Congress. These fundamentals will drive long-term value more than daily headlines.